Hello and welcome to today's 10 at 10, which is available for everyone. Sort of a little voice pitch break at the start. Always makes it interesting. So yesterday we covered our various ledgers, and today we're going to look in more detail at the sales and purchase ledgers in particular, because these ones are the ones which are probably one of the ones that you're going to come into contact with most in business, and actually a really key one, because sales and purchase ledgers are ones that we usually find generate the most confusion or the most errors, and there's really simple ways to avoid some of these errors and of course to post them correctly. So we're going to start off with sales, and first thing I'm going to say is before you start posting sales, it's important to look at the actual invoice process and the actual invoices you have in question. So the first thing we're going to need is an actual finalized invoice before we commit it to our account. So basically, not a quote, not an order. It has to be an actual committed invoice. Quotes and orders won't impact our accounts until they're finalized and approved as an actual invoice. Other things to consider is on the actual invoice we're issuing, we need to make sure that the customer address is accurate. So on our accounts system, it needs to be accurate as well, because obviously we don't want to duplicate customer records, because that makes it very difficult to track our sales and of course to do credit control if we're making duplicate accounts. So check the customer record is one that's existing before we go to post it. VAT number, we want to make sure these are displayed on the actual invoice. So when we create our template, we want to make sure that the VAT number is visible to the customer if we're VAT registered. If not, we need to add it to our invoice so that they do know. And of course, payment details are vital. So many times we see clients, usually when we first take them on, because we fix it very quickly, where they don't actually have the payment details. So they don't let the customer know how long they require for payment. So if you want 14-day payment terms, make sure you say. If you want 30-day payment terms, make sure you say. Otherwise, if you don't say, they will just pay you by a standard of what they think is fair, which is usually about 30 days. So if you require quicker payment, make sure to post details of that in your invoice. And of course, provide your details for physical payment. So many times I see supplier invoices come in where they don't actually have payment details. You can't physically pay them by backs because they don't provide any information. So make sure you're not one of those people issuing sales where you're not actually letting them know how to pay you. It can be a bit of a fiddly task otherwise, because you end up backtracking a lot. So when we're committing a sale to the accounts, there's some items we need to consider when we're physically posting the invoice. So maybe you're using an external system and uploading them to this one manually in your account system. Maybe you're syncing them. Maybe you're creating them in the account system from start. Either way, we need to consider all of these options. So the first one is the invoice date. Now, when raising an invoice, we need to consider when the service is physically delivered, or whether it's a deposit, and of course, when the date of the invoice should be. Now, most systems, when you go to create an invoice, will default to today's date. But the reality of the situation is if you're creating, say, a month-end invoice run just a few days later, it should be on the month end. And likewise, if you're raising invoices which you may have received a deposit for beforehand, make sure you're raising the invoice on the date the goods are physically delivered. That's the point of sale. Okay, so the other thing we need to consider is, of course, the value on the invoices and whether or not we're going to have VAT applied. So if we're VAT registered, not all sales items will be 20% VAT. Some of them might be exempt, etc. So not that common to have a mix, but it does happen in some businesses. So do keep an eye out for that if you say selling children's clothes or anything along those lines, which might be an exempt transaction. Consider the due date. This is really important for cash flow. Obviously, if we're going to raise the invoice date will determine the VAT point if we're on the accrual scheme. But the due date is really vital for cash control. And of course, credit control makes it very hard to chase if you haven't applied the due date correctly. So most systems will default. Make sure you overwrite it if the default's not correct for one reason or another, because some customers might have different terms. And what I would say is to update the customer's master record so their default is based on their actual payment terms. Use references on your invoices to help prevent errors and duplicates. So most systems will automatically default to a invoice code, but just make sure if you are overtyping them to, say, match up to your other systems, you're not accidentally duplicating any if you're doing this manually. The more information you can provide on the invoice, the better. So when you raise a physical sales invoice to your customer, provide line by line breakdowns wherever possible. It helps avoid disputes and it helps give absolute clarity to the customer of what you're delivering. And from an accounting perspective, you get far more information. So each line item might not necessarily go to a single chart of account code. So you might have several sales codes. You might have one invoice which involves several sales codes. So make sure you do have your chart of accounts updated so you have your multiple sales income streams. Because, of course, we might have different sales items on a single invoice. And then, of course, we need to consider when we raise the invoice, depending on which system you use. I know Xero and QuickBooks do this option, and probably most account systems do. When you raise the invoice, it usually gives you two options. And this is particularly important for VAT registered businesses because there's an option to tag whether the invoice is VAT inclusive or VAT exclusive. Really important one to consider here, because if you're raising an invoice which is intended to be, say, £120 including VAT, make sure you click VAT inclusive if you enter the value as 120. If you enter the value as 100, you'll need to make sure it's marked as VAT exclusive, so it adds the VAT on top. Really important one, because so many times we see someone raise an invoice for, say, £100, marking it as VAT inclusive, and they're losing out on £20. So really important one there. Check the VAT inclusive, check the VAT exclusive options. So there's some of the ideas of items to look for with sales. And now we're going to look into purchases. So purchases, what I would say is, once again, before you start, check the physical document. Is it an invoice? Is it receipt? Does it have a VAT number, which is really vital if you're VAT registered, because obviously you need the VAT number to be displayed so that you can reclaim any VAT. And importantly, in general, and especially for VAT, it must be addressed to your company if it's a physical invoice. And obviously a receipt might not be, because you might just pay for it while you're out and about and claim it as an expense. But a physical invoice must be addressed to your registered legal entity. It must have the right company address. So if for any reason anything on this invoice isn't how it should be and they don't have the right customer address, or if you're looking at the invoice and you think, I don't agree with these values, etc., dispute them. Get the queries out early, and that way it can be resolved, and we avoid basically paying something which we didn't intend to pay, or most importantly, we don't pay something that doesn't actually belong to our company. Because legally speaking, if it's invoiced to the wrong company, the risk is you can add it to your system and you've added an invoice which doesn't even exist to your company records. So it's really, really important to make sure that we raise these queries as soon as possible. Have they provided payment details? If you're doing payment runs, really important, because it's such a pain if you go to pay a supplier and you find actually they haven't provided their bank details. As I mentioned earlier on, we have seen it where a supplier chases a payment and is like, okay, I'd love to pay you. I have no idea how to. Please, could you provide your bank details? And that gets confusing. And it also opens you up to exposure, because then you're getting emails over of bank details, etc. Just avoid it. Just get it on the invoice as soon as possible. Then when we're posting a physical purchase invoice, there's a few items to consider. So we want to make sure the invoice date is uploaded correctly. Really important one there, because remember, the system may default to whatever date we're looking at. Or if you're using Receipt Bank, it might read the incorrect date. So just make sure you're checking the due date, the actual physical invoice date on the invoice, because this is important for your VAT returns, especially if you're accrual scheme registered, and it's important for your accounts if you're doing it on an accrual basis. Due date, vital for cash flow. Make sure it's correct. So when you physically upload the invoice, overtype the amount if the due date defaults to the wrong amount. And likewise, if the invoice date is probably defaulted to the wrong date, you've had to change it, you'll probably have to change the due date as well, because the due date would have stayed on the default of the original invoice date that the system was trying to register. So otherwise, it makes cash flow a bit of a nightmare, because it's harder to predict when your cash is physically going to be paid. And of course, if you're looking at your account system to determine how to pay suppliers, it can skew this, because it makes it really hard to see what you're physically due to pay and when. One of the most important things I would say with purchase invoices as well is look at the references in the physical invoice you're creating on the system. So there will be options to add a unique reference, and I say unique being an emphasis here, because if you enter in the unique reference as it's showing on the invoice, the system will recognize if you go to create the same reference again. It will automatically flag and it will give you an error, it won't stop you doing it necessarily, but it will give you a warning message before you do it, and it makes it very blaringly obvious. It stops duplication, and actually it stops errors as well, because you can notice them much more clearly if you think actually this invoice was, and I have seen it before, where this invoice gets voided. They don't issue a credit note, they just void it, and then they issue another with the same reference, and you don't know which invoice is the real one. That's a bit of a pain, because it's very hard to spot from a bookkeeping perspective, especially if you don't know what the purchase was for initially. Now, the one thing I will say when uploading purchase invoice to the system is make sure you have information on the line items. Really important. What you might find is actually that one invoice might be related to more than one purchase item. So there might be more than one account code involved. So you might have, say, a purchase for one cost, a purchase for a different cost, and you might even have a purchase of an asset on a single bill. Please do isolate this out. If you put it all through as one cost, you'll get a mismatch. It'll be really hard to track what's going on in your profit and loss. And of course, you might miss out on, say, assets in your balance sheet. And of course, we don't want to miss out on We don't want to miss out on any of these costs. So we want to make sure they're allocated properly so that we can get the full accounting messages which we need. We need to make sure that our management accounts are meaningful. So break them down, really useful. And of course, check once again that the invoice is being posted as VAT inclusive or VAT exclusive. So if the total invoice is, say, £250, including VAT, try not to post it as £250 excluding VAT, because otherwise it will add 20% VAT on top, and all of a sudden the documentation that you have on the account system won't match the documentation you've received. And the risk with that is you end up paying a supplier more, your costs are too high in your P&L, etc. So just make sure to look out for that, because it can be one that defaults to, say, a certain option, depending on whatever supplier defaults you have in place. If you are unable to recover the VAT for any reason, say you don't have suitable VAT documentation, they haven't provided a VAT number, they've invoiced it to the wrong company, and then when they've changed it, I don't know, something's changed. If you're unable to recover the VAT for any reason, remember to post the full value of the invoice, so the gross cost, as a single cost with no VAT. So really important part here. A cost for £100 plus VAT becomes a cost for £120. Just remember, you can't recover that £20 worth of VAT. It gets added to the cost if you can't reclaim it. So a quick overview of some of the account codes we could provide with purchases are items such as expenses. So what we need to do is, when we get a physical invoice, look at it, break it down to line items and go, okay, where should each account code actually go? Now, the question I would firstly ask when looking at purchase invoice is, one, is it an expense? Which sounds really daft, but if not, is it for the purchase of an asset? So is it an expense? Is it an asset? Two very different things with very different accounting treatments. And then, if it is an expense, does it directly relate to a sale? AKA, is it a cost of sale? Or does it have no relation to the sale and it's actually an overhead? AKA, it's probably a fixed cost of some sort. So remember, cost of sales have a direct relation to a sale. Overheads are generally fixed, regardless of how many sales you make in a given month. Two very different accounting treatments, because one determines your gross margin you're making on a sale, and the other one doesn't impact that gross margin at all. It impacts your operating profit further down in your P&L. So really useful for management information to isolate the two. If it's for the purchase of an asset, we need to determine whether it's a current asset or a non-current asset, by which I mean a current asset is an asset which is in use for less than one financial year. And a non-current asset is in use for more than one financial year. So that's the only differentials between those two. Less than one, more than one. Now, to put some clarity on this, I'm just going to use some examples. Say you purchase, you have a bill, and it's for a laptop. So this is going to be used for more than one financial year, because it's going to last, say, 3 years or so. This will be classed as a non-current asset. So this will sit in a balance sheet account probably under computer equipment. Most likely, if you are VAT registered, you'll find the person selling your laptop is probably also VAT registered as well. It's quite common. So make sure this goes to your balance sheet account under a non-current asset. Stock will be used for less than 1 financial year. So if you're purchasing stock, this will go to an asset account in your balance sheet and then eventually get written back to your P&L when the physical goods are sold. Or likewise, you can post it to your P&L and write back to the balance sheet. But my personal preference and the way that I do it is post to the balance sheet and write back to the P&L because it's easier to track whether you've written back the cost to a P&L. Otherwise, you end up overflating your P&L and it looks very confusing. But that's a different matter entirely. Packaging or postage for a delivery of a sale. This will be classed as a cost of sale. So you probably have you might potentially have more than one account code. So you might have one purely for packaging. You might have one purely for postage. But remember that these two, if they directly relate to a sale, should really be recorded in a cost of sale line. So just before your gross profit. And it's really, really important to make sure they're not confused with overheads if they are a direct relation to a sale, because it makes it clearer what your gross profit margin is. And of course, really common one, electricity. Generally speaking, fixed regardless of sales, and there are the odd few businesses where that's perhaps not the case, but usually most businesses, like here, sitting at the desk, if I'm not making a sale at this point in time, that light in this room is still going to cost me exactly the same. So it's fixed regardless of sales. This will be classified as an overhead. So make sure you have the account codes you need, but also when you're posting a purchase, consider the various account codes, and of course, consider some of the items we've mentioned before. Really important to get these correct. So lots of things to think about with sales and with purchases. And of course, there's so much depth on the physical topics as well. So this will give you an insight of some of the items that we would look for when posting a sale, when posting a purchase, and of course, some of the items you might find as queries. So I hope you found this useful. There is, of course, quite a lot of content on this. And actually, if you're a member of the BBB Club, we do have additional content and we have cheat sheets and checklists to help with these various items. So they can be really useful because there's, like as mentioned, probably about 3 times now, there's quite a lot to think about with this. And it just gives you a little bit of a common knowledge of, okay, that's what I'm looking for. Thank you, tick, tick, bit, bash. And it makes things so much easier. But if you aren't a member of BBB, of course, we are doing 10s at 10, which are available for everyone. So please do join us in tomorrow's session, where we're going to be looking at some more of our bookkeeping intermediate classes. I hope you found this useful, and I hope to see you tomorrow. Thank you very much. Take care.